in even his world, that confidence figure should weigh more. And so I count this as another instance of disingenuity, because that's important in his world. In my own world, if you ask me, how much do I care about this? Things are worse than the numbers that Powell is touting.
Hello and welcome to Soar Financially, a special live edition here on Fed Day. It is March 19th. It is Wednesday. We just got out of the press conference, just watching what Jerome Powell has been saying, and I have invited back Jerome Powell. I invited back Lobo Tiggre, a recurring guest, and I'm excited that both our schedules lined up today to have this live discussion about what Jerome Powell has been saying about the Fed decision. A lot of buzzwords that we'll need to discuss. I'm just going to mention a couple: transitory, hawkish, stagflation, inertia. Those are just four we'll discuss throughout this conversation. And in the meantime, gold marked a new all-time high at 30.51. Absolutely insane moves here in the market, and we'll dissect that with Lobo Tiggre, also known as the due diligence guy of the independent speculator. Before I switch over to my guest and bring him on, quick reminder, if you haven't done so, hit that like and subscribe button. Helps us out tremendously. I'll remind you throughout this live conversation, of course, as well. And also, since this is a live conversation, we will allow questions. Please put those in the chat. I'll throw them in if it fits into the conversation, or I'll save them towards more at the end of our discussion here with Lobo. But please put them in. I'll see if I can favorite them and highlight them, and don't forget about them. So thank you so much for tuning in. Hope you can hear us okay. And now let's get started. Lobo, welcome back to Soar Financially. It's good to see you again. Thanks so much for making the time for this live conversation.
Sure. This was the most fun Fed day I've had in a long time. So let's get to it.
Absolutely. Yeah, let's dive right in. Let's start with a bit of a recap. What is your first initial takeaway from the press conference and also the FOMC statement here?
So my first thought was, that's kind of dovish. You know, I had heard a lot of talk about hawkish, all this bad news. Excuse me. There it goes. Puerto Rican sneeze. Yeah. So, but bad news is good news, right? You know, there was all this talk about scary things, and to my mind, that was actually dovish. Those are reasons for the Fed to cut. So really interesting that they raised their inflation expectations, which you would think, you know, that's where the hawkish would come from. Oh, they have to raise rates. The inflation is job number one. But they have a dual mandate. And no, the SEP says they're still looking at 2 rate cuts this year. That's extraordinary to me, that they're raising their inflation expectation, and yet they're still saying they're going to cut rates twice this year. The chaos and the why and wherefore, we'll go there. But that was my initial reaction. I was like, wow, really? And then I thought, well, you know, this is their way of actually trying to talk tough, but actually, you know, my takeaway was this was actually very dovish. And the press conference was supremely dovish in my view, without actually saying anything materially more dovish. It was all the I don't knows and we don't knows and uncertainty and sticking with the rate cuts despite the high. I mean, to me, it wasn't so much what was said, but kind of, but reading between the lines, Fed speaking, if you will. I mean, I think Powell's intention was to reassure markets, and that was very dovish.
Yeah, it was interesting. He was tap dancing. Is Jerome Powell a good tap dancer here, Lobo?
You know, when he first came on the scene as Fed chair, I thought, wow, this guy's more of a straight talker. You know, he seems so down to earth, calm, measured, reassured, doesn't do a lot of arm waving. And I thought, wow, we might actually get some straight talk for once. But actually, I think, no, he's just supremely good at coming across that way while delivering a load of dingo's kidneys.
That's a new euphemism I haven't heard before. So that's I'll have to come back to that one. But a lot of things were discussed, and too bad that nobody asked the question, at least while I paid attention to the press conference. Like, Jerome Powell, why aren't you raising rates to fight what might be coming down the pipeline this year?
Let me jump in on that, Kai, because 2 people, or at least twice it came up, maybe it was referenced other times, but there were 2 direct questions of, why are you still cutting? Like, why 2 cuts if inflation is going up? And, you know, this is one of the funniest moments of the conference. One of the guys said, you know, are you in fact saying that we're back to transitory? And Powell said, yes. And he defended it. He says, and, you know, not not unreasonable. The logic of what he said was fair. Sometimes if something happens that will have a one-off effect, like the advent of a new tariff, that that effect it's not permanent. So transitory is a reasonable way to call it. So that's true. Like if you put that in a box and just say, okay, look at that. Yeah, that makes sense. That's perfectly sensible. But he was pushed back on that too. It's like, well, don't you remember last time when you talked about transitory? You had good reasons for why that would be transitory, and look what happened. And he didn't back down. He's basically stepping back into the transitory narrative, and I think that's hilarious. And it maybe more important, amusement aside, it kind of tells you which side the Fed is on. Like it has this dual mandate. And the fact that they're reintroducing transitory, it's all because of the tariffs, it's not real, it's transitory. Well, who says the tariffs are going to be one and done, right? This reciprocal thing, the ideal outcome would be both sides say, oh, reciprocal, the perfect tariff level is 0 on both sides. Yay, let's go home. But when does the perfect thing ever happen in the real world of geopolitics, right? So I think this whole, I think it's a red herring, this whole thing that tariffs are just a one-off price increase. There's no permanent inflation. Of course, that's not right. I mean, there's tit for tat, there's negotiations, there's reciprocation, there's retaliation. And then there's things that aren't tariffs at all, bans and cuts and boycotts and things. These are all have, I think, lasting implications. But anyway, even if we give them that, I mean, just the gall to say, yeah, it's transitory, it's outstanding. But that again, the bottom line though, that tells you of the dual mandate, it's the dollar that goes under the bus. If the labor market is really threatened, then that comes first, and that I think longer term is inflationary. It's bad for the dollar, and it's good for anything real. Our favorite commodities included.
Yeah. Now let's take a look at the economic projections real quick, just so we have a baseline of discussion here, because it's really, really interesting, because they're projecting lower growth. 2025, 1.7%. The December projection was 2.1, so they've reduced that. Unemployment rate up to 4.4. December projection was 4.3. It doesn't sound as dramatic, but it's ticking up. And we'll come to the job numbers and unemployment rate here in a second, and how DOGE is affecting layoffs or unemployment rate in general. PCE inflation ticking up 2.7%, core PCE inflation 2.8%, all higher than previous projections, and they keep coming back to 2%. If you can see it here I'm not sure if you can see the mouse on the screen on the live stream, but longer run 2%. Of course, what else are they going to say? Nobody's going to change it to 3 or dare change it to 3. Lobo, what do you make of those projections?
Well, I mean, this goes back to that hawkish dovish question, but I mean, in some ways, it's a striking admission. I mean, wow, that they're even, admitting that there's a problem in the near term. And okay, they're dusting off transitory because that worked out so well for them before. But for them to even have that show up in the dot plot, I think it's really quite significant. Because really, if it was all that transitory, if it really was, this one-off thing, well, the tariff war has already started. So why would you move your dots up farther out? It strikes me as not credible, let's say. I think they have to put that out there, because I think the reality is that they know that inflation is stickier than they believed it would be. The rebound in inflation, they kept talking bumps in the road. It's, transitory without using that word and so on. But it wasn't just like 1 month. It was 4 months. The previous low was last September, and here we are in March. And okay, CPI came in lower this time, but they're projecting PCE, supposedly the more important one, to go up this time, not over the year ahead. So, the inflation rebound is there already, and blaming it on tariffs, which are just now starting to take force, I think is disingenuous.
Yeah, no, absolutely. If you look at it, the expectations, it doesn't make sense. It's just the whole narrative. It doesn't really seem to fit.
You said expectations. And that one is a clear bullshit call. Sorry
Yeah.
for my French there. But, he's like, oh, I don't see it. Oh, and he's trying to say, oh, we look at the longer term. But the longer term number was the more astounding pickup in that last University of Michigan survey, which, to some reporters' credit, somebody pointed out to him, hey, you said before this was really important. Why are you dismissing it now? And he's like, oh, well, we look at the longer term. And like 5 years was the short end of the longer term. Like what other data does he have that's, inflation expectations for 10 years from now? Nobody even asked that question. So I just think it's nonsense.
Yeah. No, I tend to agree. It doesn't seem to make a whole lot of sense because all of a sudden stagflation is sexy again. And to quote, right, Jonathan Farrow said stagflation is now bullish for the markets. S&P's up 1.3% as we're speaking. How does that make sense? Like, where do you see that market euphoria?
Right. Well,
I don't want to use that word.
It's not stagflation is great. It's, we were worried that one of our dots was going to drop down. So it would be one cut instead of two, or maybe no cuts. There was palpable fear, I think, in the markets. We've seen it in the last couple of weeks. Things are not going the way we expected. Maybe the Fed takes away what's left of the punch bowl. There wasn't much punch left in the bottom of the bowl. Our 6 or 7 rate cuts went down, that. But that last cut or two, if the Fed yanked the punch bowl, I think we would have seen a massive sell-off. Like right now, it would be dropping like a rock right now instead of the opposite. So I think it's, if nothing else, something of a relief rally. Could have been worse, and we'll deal with the consequences later.
Is that more of a maybe expectation that more easy money will be available down the road with the Fed hinting at easing QT, whatever that means really, because the market reacts right now, but easing QT only starts in April, on April 1st. Is that maybe misplaced euphoria?
Well, a couple things. The market is forward looking, right? So if you were worried that there weren't going to be these rate cuts, and now they are, and you can price that worry out. That kind of makes sense. And 2 rate cuts, I mean, it seems like it's not a big deal, but in a market where you're worried that you might not get any, then I think that's quite significant. On the QT, this was another really funny part. Like, he really did a masterful job of coming across like it's not important. There's no hidden message here. There's no signal here. It almost reminds me of the old, watching paint dry comment, like, nothing to see here. These are not the droids you're looking for. Move along, right? But I think that's a big deal. I mean, they're dropping the QT down to 5 billion, which is basically almost zero. They're cutting it off. And he says, oh, it's just, we're close to the target. So, why not slow down the glide path? Like, it all makes perfect sense, except when you actually just step back and think about what we're saying. We're keeping rate cuts on the table. We're stopping almost QT. I mean, that is dovish. And so no wonder the markets responded positively. And by the way, not just the equity markets, risk assets, but this is bearish dollar. The dollar dropped on this news and gold went up, and that makes perfect sense.
Yeah, no, I tend to agree, Lobo. Sorry, I'm just taking some notes. I saw an interesting comment here in the chat that I'll have to get back to later. It's about the ECB and inflation and the Eurozone spending. We'll get to the inflation expectations or that question in a minute. Consumer confidence. You hinted University of Michigan study as well. We have to take a look at it because he dismissed it quite boldly, saying, outlier, don't worry about it. Consumer confidence is dipping because of tariff discussions and uncertainty in the market. Where do you rank it when you look at that, consumer confidence?
Well, I actually place less weight on consumer confidence than the Fed heads do. Sorry, I shouldn't do ad hominems. But in their model, their way of thinking, right? Economics is all about confidence. Inflation has nothing to do with money printing, but if people expect more inflation, then they'll get it because they'll pay more now and they'll demand more wages, blah, blah, blah. So for them, that confidence number is really important. I think, people, their confidence is backward looking. They respond to things. The inflation expectations, Powell dismisses it, and he sounds very nice and understanding, oh, we understand the pain, and we're not dismissing that. But he is basically telling the people that they're wrong. that you're looking at the price of eggs now, and it hasn't gone down as much as you'd like. But the economic statistics say that things are getting better. So he's basically saying, don't believe your lying eyes. Listen to me and my statistics. This is what really matters. In his world, that confidence figure should weigh more. And so I count this as another instance of disingenuity, because that's important in his world. In my own world, if you ask me, how much do I care about this? I do see it as backward looking as well. And I'm not afraid to say so. People suffer from recency bias. That's a well-known phenomenon. And so it's a lagging indicator, but it tells me that things are worse than the numbers that Powell is touting.
And we're seeing it. Like you brought up eggs. I think there is an end to the avian flu here. So that part in the inflation calculation might, or consumer confidence and inflation calculation might be taken out, or at least reduced, because it has been a big part.
And sorry, let's tie this to unemployment, which you mentioned
let's do
earlier.
that, yes.
Okay, and before we go to the EU, but the confidence obviously, touches on the unemployment thing. And Powell reiterated that it has been well balanced before. And well balanced doesn't mean robust or growing or healthy. I mean, the well balanced is like, if you look at the quits and the job openings, and he did acknowledge this. He said it's not like we have this booming hiring spree. It's that companies aren't firing so much, and people aren't leaving. Like, in my mind, this is actually kind of a bearish framing. Nobody's confident here. People don't want to fire because they don't want to be able to get people back, but they're not hiring either. People don't want to quit because they don't know if they'll be able to get another job. So the Doge thing is, let's come back to that. It's not unimportant, but it is this like big outlier. Let's just look at where things are. And the Fed's own projection in that dot plot is going up to 4.4. And he dismissed that. It's kind of like, it's not a big change. No, sorry. From 4 or 4.1 to 4.4, that's like a 10% increase. That's a big change. That's a lot of jobs. If it goes from 4.05, 6 or 4, which, is close to 4.1 or 4.0 where we are now, to 4.4, that will be reflected in a lot of unhappy consumers. Consumer confidence, I think, would tank on that change. Objectively, you could say, 4.4, that's low on a historic level. It doesn't matter. It just changed in a way that made a lot of people unhappy and will make everybody else uncomfortably nervous. And then again, remember that unemployment rate, the U3 rate that they like to quote, is the hedonically massaged or whatever, the new an improved version, which grossly understates things. If you look at the U6, and this isn't tinfoil hat Lobo making up some number, this is the government's own number, the U6 number, which is closer to the way they used to measure unemployment. And this matters. If you say unemployment's at a 50-year low, well, then you have to look at U6. We didn't use U3, or what we now call U3, 50 years ago. And the U6, I haven't looked at it recently, but as I recall, it's still way up there,
8%.
8%. Yeah. So no, we're not at 50-year lows. We're at a significant level of unemployment. And if it kicks up from here, on Main Street, people are going to feel it, and they're going to say something. And to have Powell say, don't believe your lying eyes. The statistics say everything's fine. I think people will call BS on that.
Yeah, you really downplayed, or I wouldn't say downplayed it, but he said it's a local problem for now, the unemployment rate, because of the layoffs through the DEUTSCHE committee and changes taking effect there. It's not on a national scale a problem. Like, that's what he said, almost verbatim, to be honest. But how do you see that escalating? How do you see Doge impacting the unemployment market here and the unemployment numbers, Lobo? Is maybe the better question to ask here.
What I'm saying is, I think there's weakness there anyway, and then you have Doge on top. So this is, it's interesting. I have a feeling that this will turn into something a lot more significant than the powers that be are letting on right now on either side. The people on the GOP side, they want to make things not sound so bad. Trump's little disturbance, right? I think there's a pretty good chance that this will have knock-on effects far beyond just the number of government employees fired. somebody, I don't want to count on the statistic, but it was some like think tank or respected source was saying that for every government job that is terminated, there's 2 contractors that lose their position as well related. I don't know how realistic that is, but the idea of it makes perfect sense to me. If just look at the US aid thing, for example. Firing the US aid employees is one thing, but what about all those nonprofits that they cut off from the funding? There are huge knock-on effects. And it's not just going to be US aid for long. They started what they saw as the low-hanging fruit, the easy and obvious places to go. But I think there's going to be a lot more going on there. I mean, for example, there's all this fuss about the famous email that Elon sent out saying, respond to this email. What is it that you do here exactly? Respond to this email within 7 days or you're fired. And everybody got all up in arms. Oh, this is terrible. How can you fire people without even knowing who they are, by email but that's not the point. It wasn't that Elon was going to evaluate the answers of 15 million government employees and what they did last week and why it was important. The idea was just to see if they answered it all. The idea was this broad dragnet. They had, from the data, it suggested to them that there just a lot of these people either didn't exist, like actually didn't exist. Somebody's getting paid and then it's not a real person, or that they weren't doing any work at all. They had gone fishing 2 years ago and never come back, that sort of thing. So the idea was just this broad dragnet to just catch the people who aren't there and get rid of those, and who could be against that? Somebody either doesn't exist or hasn't worked for years. How can that possibly be bad to fire that person? And if you say, oh, well, they're nuclear inspector, whatever. Yeah, but if they weren't there and weren't doing the work for 2 weeks, they weren't nuclear inspecting anything, right? So nuclear inspecting, that's not a verb. I think you understand what I'm saying. I think this is just getting going. And I think the impact of the thing itself, you could say, oh, it's just, be local. Obviously, Washington, D.C. real estate is in question right now. And that would be a good thing in my view. But I think it spreads way beyond there. And it's not, if you want to say this is transitory, I think we're looking at a 2 to 3 to, Trump term transitory. You can look through that if you want, but 4 years is a long time to ask consumers and businesses and employees to hold off because it's all just transitory.
You brought up transitory again. I was going to go there, but I was going to ask a follow-up question first on the unemployment side. But since you brought that up, is there a political message in the transitory word? Meaning, okay, yeah, it's transitory because in 3.5 years we'll have a new government. And he gave some historical context. Yeah. That's why I thought of that, because he was like, well, in the past it was transitory because after 4 years we had a change. Then I don't want to interpret too much into it.
Unless they planted the question, Powell didn't bring the word up. Somebody else did, and then he said, "Well, yeah, it's transitory, right?" So I'm not sure there, Kai. That's an interesting thought. We don't want to. I don't like to. Imagine too much of who's doing what, because we don't know. And people get these ideas and they think they have the explanation. Oh, it's all the Bergen builders, or the Trilateral Commission, or the WEF crowd. It's or the Jews, or Putin, or Zelensky. Right? They have this answer that everything is because of this, that, or the other. And I think those answers are almost always wrong. So but I think there is something to the idea that Team Trump wants to front load the pain. Like if they know they're going to put big changes in, do as much as they can, as quickly as they can, because they might lose the midterms and then they won't be able to do anything. So they just do everything they can while they've got, the majority in Congress, and B, they can blame it on Biden because there's long and variable lags. So anything that happens in the first 6 to 9 months in the economy, they can say, oh, it's got nothing to do with us. That's all because of Biden. And so I don't know this is happening. I'm not saying this is true. I can see where that is something that could be a powerful dynamic in what we're seeing right now. On the other side, it's we put a meme out there. It's like the media is all, everything's great, economy's great, and then they change the chip in the brain, and it says Trump, and so now everything is recession, the economy's terrible, stagflation, and I'm not out here to tell you there's this vast media conspiracy, but it is striking how quickly the narrative went from everything's great, most, strong and resilient economy, all this stuff, to all these concerns. So I guess what I'm saying, the defensible thing to say here, Kai, is that economics is not all about economics. There is always politics here. And it is naive to imagine that, the simple economic statistics and facts will be all the basis of decision making. And that, yes, there are powers in struggle here in the same way that on the geopolitical stage, the Game of Thrones, as horrible and violent and ugly as that show was in some ways, I actually think it was a public service in that it reminded people, how power struggles, how vicious and bad they can be, and how they affect the ordinary person. I wish they had done that without any magic. If that had been the history of the War of the Roses or something like that, the 100-Year War, without dragons or magic, then it would be a clearer message to people. Remember, your grand leaders on either side, they're not your friends. And
then it would have been House of Cards, and we've seen that show, and it was award-winning.
Yes,
right?
House of Cards.
So,
yes,
we've seen that show. Kevin Spacey and everybody else won huge awards.
By the way, that was a ripoff of a BBC show by the same name.
Oh,
done much
it's
earlier.
like The Office. Americans can't come up with anything original nowadays, can they? Trigger
Spider-Man
warning.
27 coming to a theater near you.
I think there's a Captain America and a Red Hulk played by Harrison Ford coming out this summer. So, we're all in for a doozy here. Great new ideas. But unemployment. I quickly one more question on the unemployment side before we move too far away from it. Can the private sector absorb what's happening in the public sector, meaning all the layoffs? Can we absorb those, and what happens to those government employees that are being axed right now?
No.
No, it's like a good point. There's not enough growth. I
it's
say.
not the growth. I mean, think about it. You're a lifelong bureaucrat, and you've been following the 3-ring binder of how not to get in trouble, and do the minimal amount of work to collect your paycheck, and okay, maybe let me go beyond that. I know for a fact I have met persons in government who sincerely cared about their job and doing their duty for the American public. I mean, they really thought of themselves as public servants, and they cared, and they took pride in trying to do the best they could for the people. But for every person I've met like that, I don't have statistics here, but it sure seems like it's 49 or 99 that were the other way. I think a lot of those people are going to be, very difficult for them to find jobs in the private sector. I'm reminded of the first Ghostbusters movie, talking about multiple sequels. You remember the first movie when they get fired from the university, and one of the Ghostbusters says, "Oh, you don't know what it's like in the private sector. They expect results."
Good point. I love Bill Murray. Dan Aykroyd, phenomenal. Big fan. No, good stuff. Trump session. We need to talk about the Trump session because Powell spent a few minutes on discussing recession indicators and probabilities, ticking up to 36%. He dismissed them. They're ticking up, but they're still low. Jeff Gundlach the other day, I think on March 12th or 13th, he put out a webinar running through some data. He expects 60% recession indication, so way higher than the Jerome Powell. Like, what camp are you in, Lobo? And where would you put the recession odds right now?
Well, remember that the Fed never predicts a recession. It has predicted 0 recessions ever. They can't. If they did, they would cause it. So, I mean, it's just a given. He has to either lie or dodge or in some way, run off stage. Right? He just can't answer that question honestly, no matter what. And it's not reasonable to expect him to. I think Jeff Gundlach is very smart. He's one of the few mainstream financial types that I have a lot of time for. I listen to him routinely, and I find him very insightful. Where he gets his numbers, I don't know. If we put any weight on that theory, and it's just a theory that I mentioned before, of Team Trump actually wanting to cause the pain as soon as possible, to get it over with, rip the Band-Aid off, and to blame it on Biden, then I can see why you would have a very high odds number on there. That would actually make sense to me. But even without that, I mean, markets hate uncertainty. And if I'm a businessman and I make widgets, right, and I don't know if my input costs are going to be tariffed or not, I don't know if my competition overseas is going to be tariffed or not, or even if Trump says he will tariff them, well, what if he comes up with a deal, right? It's all the art of the deal. And and I build a new factory to double my widget production, and then there's no tariff, and now I've got overcapacity and I can't compete with the factories in Thailand or wherever, right? So I do think that this kind of thing slows economic activity. The decision making needed to continue the growth. Who wants to make any decision here? And not to let Powell off the hook, but bring him in on this. One of the things I found most striking about this press conference is I don't think I've ever heard a public official say, "I don't know," or "we have no idea," so many times in 45 minutes. That we don't know, or there's high uncertainty, or it's very difficult. I mean, that was in his answer to pretty much every question. And at one point, I remember him saying, okay, we've got these projections and things. But he said, I don't know anybody who's confident in their projections. Like, wow, this is the freaking Federal Reserve with their 400 PhD economists. And he doesn't have any confidence in his projections or any of his teams. So, and that's the freaking Fed. So imagine you're the CEO of Widget Inc. How the heck do you make decisions in this environment? And if you don't, you pull back your horns, you're defensive. Maybe you don't fire, but you're not hiring, you're not building, you're not expanding. I mean, to me, that, if nothing else, never mind the specifics of, oh, this blows up, or we didn't have the copper after all, or all these things. Yes, that can happen. But just, what is happening now, the uncertainty happening now, I think that is a recessionary force. And let me say one more thing, because I've had people, write in or express the opinion, hey, Lobo, you were right about the hard landing. The recession is just coming later than you projected. I have to say thank you, but no, that's not right. The recession that I called last year and was wrong about, at least on the undeniable recession front, was based on the COVID knock-on effects, not the new uncertainty based on, the Trump changes. So if the Trump changes induce recession, then I wasn't right.
No, it's interesting because he used the word inertia, which I actually quickly had to Google, so I understood it. But it makes sense and it doesn't make sense because they adjusted their growth and inflation expectations, but they said, well, we don't have any clarity. We don't know what to do. Then why adjust? Because he said at one point, right. I think I wrote that down here, no hurry to adjust policy stance, prepared to wait for greater clarity. Why adjust the numbers then if there's no clear visibility?
Right. That's not what inertia means, by the way, but you're talking to a former physics student, so I can't let that one slide. But yes, clearly what you're saying, and I agree, I don't want to have a Jordan Peterson moment here, but what I hear you saying, and I think I agree, is that is bullshit. There's what kind of reason is inertia to not do anything? And you're sitting here telling everybody there's all this uncertainty. We don't know what's going to happen. We have no confidence in our projections. That sounds like a reason to be very cautious, err on the side of caution. So in my view, it's clearly just an excuse. He was asked very directly twice, how can you project higher inflation and still say you're going to cut interest rates twice this year? And the answer was inertia. It was already two cuts, so we just didn't change it. That's a bullshit answer. That's not a good answer. Your data's changed, your dots changed, your projections changed. You're talking about chaos and uncertainty, and you do nothing? And you project doing nothing different? That just doesn't pass the smell test.
Yeah, and if you expect higher inflation, and I think I can't remember if we talked about it before in the record button or at the beginning, Lobo. But why not raise rates then? If he expects it, is it just a lag effect that he knows, like if I raise rates now, that they
Right.
won't hold, they
Right.
won't
But
take
he
effect
can't say
anyway?
that. But yes, we did talk about it on camera. And my answer is that they're throwing the dollar under the bus, right? They have the dual mandate. What this is telling us, without saying so in so many words, if you want to read the tea leaves, as it were, my interpretation is they're telling you we're going to throw the dollar under the bus. They're telling you inflation is not job number one. We're more worried about jobs. The labor market is the job number one now.
Makes a lot of sense. Let's stay on the dollar for a second. Let's zoom out from the press conference here real quick, because what you just said sort of fits the narrative and the goal of the current administration. They do want a weaker dollar.
Well,
Does
that's
that?
interesting, because Trump has said he wants a strong dollar, but it's kind of like marketing or something. He says that, but all of their actions are really saying, no, we want a weak dollar.
Exactly. It's like, is it the currency or the brand? I think we need to
Yes,
distinguish
yes,
there.
exactly. Strong
Right?
brand, weak, yes.
Right. So it really plays into their playbook. So really, really interesting. Maybe quickly before we get to some audience questions as well, because I think we covered most of the topics from the press conference and from the commentary. I just want to talk market reaction real quick, and just let me get the latest numbers here. Gold up only 0.45%, but we're at an all-time high yet again, 30.45. We were even a little higher earlier. S&P 500, 1.1% up, 56.77. Bonds pretty much flat. What do you make of that market reaction in general, Lobo?
Well, it's interesting that it's fluctuating. I mean, the dollar moved a lot, and now it's kind of rebounding. So it's interesting to see the markets digest all this stuff. But I do think that one, we saw, relatively mild or little reaction on the FOMC press release. And then it was, as usual, it was the press conference that really set things going. And it's funny how strong that is. Like, the Fed basically, if when you look at the tape, right, and it comes across rate cuts unchanged, dots unchanged. Ooh, okay, everything's fine. Nothing big. But then when you start looking at the details, like, well, look at this. They're slashing their GDP forecast. They're raising their interest rate, and then Powell's performance. So I guess my takeaway here really is, the Fed has said and continues to say, and this now even more so, it's data dependence. And that catchphrase wasn't highlighted so much, but I think it was pretty much understood. When you have all this uncertainty, and when you say, I don't know so many times, what you're saying in that case, we don't know, we have uncertainty. So there's no theoretical framework. There's no plan that you're adhering to, and then, that you might be forced to deviate from if things don't go according to plan. It's data, we don't know what's going on, so we have to be data dependent. And that exacerbates market reactions. If the Fed is data dependent and, they're going to jigger the money supply, the lifeblood of the global economy and finance, then it shouldn't be this way in an ideal world, but it is this way in the world we live in. So market participants react strongly to the Fed, and it makes us all data dependent in the same way. So, the data comes out, it's inconclusive, the market wobbles a little bit. It starts to seem more like this. The market goes charging in that direction, and then they have time to look under the hood. I don't know if you've noticed this, but in interviews, you haven't used it yet, so kudos to you. But like, you see how these people talk, oh, well, if we look under the hood, this other data point says this. Like, they look under the hood and they see one thing and they think, oh, I've done such a great job looking at it. Like, looking under the hood should mean having a thorough understanding of whether that engine is working right or not and what's wrong with it. Is it burning rich and blah, blah, blah. But anyway, I digress. Once the market gets to look under the hood as much as they do, and they start saying, oh, wait, this doesn't fit the narrative, right? So you see these sudden reversals. But overall, maybe what's happening is, as we said at the very beginning, my read is that while there's a lot of hawkish looking things about this, particularly the higher inflation expectations, there's a lot that is, if not dovish now, but dovish implied. Like, all the bad news, all the weakness, bad news is good news. So I think that despite what Powell said, the message between the lines was, the Fed put is here, and that's dovish.
Explain the Fed put. That was my next question, Lobo, for you. Like talking about the Fed put. What is it? What does it mean? What are the implications?
The simple version would be, if the market turns south, the Fed will charge into the rescue. And the reason, the famous Powell pivot in, what was it, late 2018 or 2019? I forget which one. After the paint drying, right? And then suddenly the markets went south and the Fed felt suddenly compelled to change its course. That's the Powell pivot, but it was an example of the Fed put. Or plunge protection team was maybe a more conspiracy theorist way of putting it. A more respectful and mainstream way of putting it would be that Powell is cognizant of systemic risk from extreme financial shocks. So he's not just propping up the market, but if the market melts down, that's bad. It makes the wealth effect go into a reverse and it hurts people. So we can't let the market melt down without doing something. So all of these are different ways of saying that the Fed has trained investors over recent years to interpret bad news as good news because it means the Fed will adjust policy in a way that's beneficial for financial markets.
Yeah. No, in that same sentence or in that same context, the Trump put, same thing. Ed Giordini said while the Fed put is on hold or standby, the Trump put is kaput. What does that mean? Like, should the market expect any saving moves from the new U.S. president here?
I think we might be getting too cute with our puts and terminology here. I think it's very dangerous to think any of us know what Trump will do and what his priority will be tomorrow. He has surprised even his supporters. So I just think that's very dangerous. But it does seem like if there is enough pain in response to something that he proposes, that he's willing to walk things back. And we've seen this with the on again, off again tariffs. It seems like, and I don't know, like I've never met him and so on, I'm just looking from the outside. It seems like he's not only prone to bombast and braggadocio, but I think there's a method to the madness here in that he's floating trial balloons and he's seeing how people will react. And when he says something outrageous and 51% of the response is, yeah, go for it, then it's like, well, okay, well, outrageous wasn't as outrageous as we thought. And if he says something outrageous or does something extreme and there's a huge backlash, and in my world, it's striking to me that he jumped in the aluminum and the steel and all these tariffs, but with the copper tariff, there was no tariff. It was, we'll study it. And I just think that's interesting because I think somebody must have got hold of him and said, sir, he likes to be called sir, right? We don't mine this stuff and we can't mine it fast enough. If you slap a tariff on this, it's going to hurt us. So we're going to study it, right? Anyway, he does seem willing to walk things back sometimes. And so call it a put, I don't know. But it's dangerous to count on any of this. When it comes to Trump's measures, I don't want to front run any of them. I want to see what actually happens.
Maybe changing gears a little bit, different topic here, Lobo. Geopolitics. I was paying attention. I missed the last 10 minutes of the press conference here. Was there any mention of geopolitical impacts? Because I know Powell talked about it last time, but I didn't hear much of it this time.
I didn't hear much of it either. So. And he tends to say, well, that's beyond our purview. He tends to say, well, yeah, we have models, we have scenarios, but we don't know what's going to happen. So, which is actually not an unreasonable thing to say. When it becomes bullshit again is when, there's a war in Europe and they're like, oh, we have no opinion on that. Of course they have an opinion. We're not asking you to predict the outcome of the war. We're like, well, what are the financial implications for the United States? And to the question that we had earlier, I don't know how far you want to go in this direction, but I do think that the changes that we're seeing are important. I think they're investable. And I don't just mean European defense contractors, though that's obviously a big deal. The short version is that I just don't see Europeans or other people, Canadians, let alone the Chinese or anybody else. I just don't see people ever going back to looking at the United States in the same way they did before. Even if Trump is out, at the end of his term, and even if the U.S. swings Democrat again, or there's an anti-Trump elected, some globalist person who just loves everything that every WEF proposal there was, right? I don't think Europe looks at that and says, "Oh, everything's fine. We can go back to relying on the United States for everything." No, I think that's a one-way door. The scales fell from their eyes. They woke up, smelt the napalm, and that has significant long-term investment implications. That's not just a flash in the pan right now kind of thing. So I do think this is very important. But no, I didn't hear anything from Powell on it.
No. Okay. So I didn't miss that part either. Okay. But maybe to expand on what you just mentioned, inflation expectations coming out of the Eurozone let me rephrase that. Apologies. Europe is going to spend a lot of money over the coming years on defense, green spending, and whatever other concessions we had to make to get the defense spending over the line here. But how is that going to impact inflation expectations in the U.S. and maybe even globally?
Well,
that was one of the questions that came up, by the way.
U.S. because the U.S. markets obviously are major drivers for everybody around the world, and commodities are still quoted in dollars. So the fate of the dollar matters to many of our investments as resource speculators. So I get that. But let's go back to Europe for a second. I mean, you're German. You tell me, how do you feel about loosening the debt brake and the German spending going up by €1 trillion almost? I mean, this is huge. Of course it's inflationary. And of course some technocrat pushes back the moment I tweet about it, only if they monetize it. Well, no, if they're going to spend this money, it's going to have an impact. And I do think, what we're seeing now is just the beginning. So as I said, I think this is an investable trend. The takeaway global, if you're not in Europe or even not in the United States either, is, global rearmament. And despite DOGE, fiscal conservatism taking a step back. This is inflationary globally, and the weakness that we have seen. The term American exceptionalism seems to have gone away. But remember that everybody's talking about American exceptionalism. What did that mean? It didn't mean, oh yeah, Americans are better than everybody else. No, it meant that there were problems in the global economy, except in the United States. It seemed, that exorbitant privilege of the United States was protecting it from bad news around the world. That just seems to have gone away over the last month or two. But where does that leave us? Well, it's not that the problems went away, it's that American exceptionalism went away. So in my view, these transformational geopolitical changes that we've seen have economic and financial implications that are serious, that are enduring. And you add that on top of the economic weakness. And I think, I don't know how you say money helicopters in German or Czech or Polish or whatever, but I think we're going to see them everywhere. And I do think that's inflationary. It's bullish for commodities selectively and for other specific investment types.
I got a question here from the audience. And by the way, Geldhubschrauber is the German word. So, Hubschrauber.
For money helicopter?
Yeah. Hubschrauber is the helicopter.
Oh, okay.
There you go. So we got a question here from the audience, and I had to read it 3 times, but I think it makes sense to ask. How does the triangle of price between the dollar, gold, and euro might get affected by a weaker dollar?
There was a time where you could chart gold and the euro, and they mapped very closely. There was a couple of years ago, there was just this time where, alternative to the dollar. And you could see them moving very closely. There was, I don't remember exactly when this was, but I remember there was a time where I would look at the euro first and then look at gold and say, oh yeah, we're still there. So clearly there's potential for that relationship to be strong again. But at the end of the day, I think it's a mistake to over mathematize this or try to come up with some kind of algorithm to trade on this. Because the fundamental reality here is that what I just said about the global situation and the end of American exceptionalism and the main consequence being inflation, that's bad news for all fiat. And which fiat is winning the race to the bottom, right? Which is a bad thing, right? At any particular time, on a Forex market, it's huge. And you'll see, big swings in the Forex market. But the reality is they're all losing, right? And this isn't new. This is, gold bugs know this for a long time. I call this phenomenon the wrong trousers. It's a mistake to look at the DXY, the dollar and the Forex markets, as somehow being an important indicator of the strength of the dollar in the real world. It's only an indicator of strength versus other currencies. And if they're all going down the circular drain, that doesn't tell us really much that's valuable. If you're a Forex trader, which one's winning the race or losing the race, yeah, okay, that matters for your trades. But for me, as a metals and mining guy, it just tells me one thing, that I want to hold on to real assets like metals that I could hold in my hand. And beyond that, sure, real estate, anything that can't be printed by the government. And I have to say that, that not be printed by the government includes Bitcoin. I'm not a huge fan of Bitcoin. I'm not telling anybody to go out and buy Bitcoin. I'm just saying that definition of being something that can't be printed by governments, unless it's hacked, right? That definition has to include Bitcoin.
No, I agree, Lobo. Maybe one last question from my end, and then we'll put a bow around this conversation here. But 30-50 gold. What does that tell you about the world we live in these days?
Actually, it does tell me something important. Of course, watch me say this, and then gold tanks and goes down to 2,700 next month or something. But I had been thinking that a nice big round number like 3,000 could be a trigger point, could be a critical level that if we hit 3,000, that we bounce off it and then go back down, that it could trigger profit taking. A lot of people who had targets of 3,000 or maybe 3,100 were some of the targets that we saw, mainstream targets, a year ago. So you start hitting these targets, you've arrived at your destination, you've achieved your speculative purpose. It's time to take some profits. And if that triggers, a downfall that triggers stops to go in and other people start selling, it could become a cascading event where just, nothing else, nothing in the real world changes. Just that technical point turns into a massive correction. Or it could be the opposite. It could be that very same news, 3,000, gets lots of headlines, gets people excited, has Johnny come latelys piling in, and it could be the next thing that takes it up to 3,500. I could, my view was going into this year that could happen. It could go either way, 50-50, no way of knowing which it is. So going from 3,000 to 30-50, kind of, I'm not saying, I want to be careful here. I'm not saying 30-50 means 3,500 is the next stop. But I am saying that, my previous analysis was up or down. And right now the data is saying up. So I have been saying in recent weeks, last month or two, that, I didn't know, but my wolf whiskers were kind of inclined towards the upside. And we're getting early confirmation of that now. It looks very bullish, Kai. That's all I can say.
Yeah, I think one of our thumbnails in one of the YouTube videos we've done with you was 3,400 is next. So we're trending that direction. Are you sticking to it?
Knock yourself out.
I'm not sure where it came from. It said in my thumbnail. I didn't rewatch the entire
the reason
conversation.
the reason for that was at the time that we recorded, I remember this now, the reason for that was that would be a real all-time high using CPI in the 1980 peak in January of 1980. If you adjust that for CPI, then at that time it was 3,400 and change. And by the way, that number is now over 3,500, which is why I throw that number out.
Okay. Maybe that's the new thumbnail title then. No, I'm kidding, of course. Lobo, we're finally getting some questions in here. Where does age silver fall into all of this? Maybe that's the very last question, Lobo. I want to keep this below an hour. I know everybody's busy here and don't want to drag this out too long.
Despite my Darth Silver mantle, I'm bullish on gold. I'm bullish on copper. And if silver's been acting as sort of an alloy of the two, financially speaking, how can I not be bullish on silver? And yes, silver underperforms. Not today. I haven't looked at silver right now since the Fed meeting. But yesterday, when gold went up to 30, 35 or something like that, silver got within kissing distance of $35 and then backed off. And I think it closed at 33 and change or something. Very disappointing. I understand that on a day-to-day basis. If you pay too much attention to these prices, or exchange rates versus the dollar, as I think of them, you're going to pull all your hair out. So, I encourage people not to obsess over that. If you step back and you look at the trend, silver is correlating very highly with gold again this year, more than copper, which is good news. If you're bullish on if you're bullish on gold, then it's hard to be anything other than bullish on silver. Now, and I'm also bullish on copper later this year. So I see it as a win-win here for silver. I also see that silver has more upside to hit a nominal, let alone a real all-time high. All of that is good. But just don't forget, so I'm bullish on silver, but just don't forget that it does still have its industrial side. If there's bad news on the industrial side, that will affect silver more than gold, and you ignore that at your own peril.
No, absolutely. Lobo, thank you so much for your time. What a wonderful live discussion as always. Thanks for coming back on. And without asking a rhetorical question here, but where can we find more of your work?
Well, you can find it at the DEUTSCHE GOLDMESSE. Of course, that's what I should answer.
I need to promote myself better.
Yeah, you should. But to the audience, I assume your audience includes a lot of people on your side of the pond, and even in Germany. And I love going to these conferences where I can meet the audience and answer their questions and shake their hand. So by all means, I usually hold an event for readers at conferences like yours. I'd love to meet you there. But until then, right over my head, you can see independentspeculator.com. If you sign up for our free weekly newsletter, you may or may not agree with everything I say, but I can promise we will not spam you with a flood of daily advertisements. I hate that.
Fantastic. Lobo, again, thank you so much for your time. Really, really appreciate it. And everybody else, thank you so much for tuning in to our live discussion here about the Fed and the Fed press conference, Jerome Powell's statements, and of course the nothing burger we more or less got out of the Fed here today. Although the commentary, the press conference was way more interesting than the statement itself. So thanks so much for tuning in. Really appreciate all the questions, all the answers by Lobo. So leave a comment, leave a like. We'll be back with lots more. I'm going to bed. I'm tired. I don't even know what I'm saying anymore. So thank you so much. We'll be back with lots more on SOAR Financially. Thank you.